Good morning, Jags. This is Fahad. Today is Friday, July 17th. Let's get started. A quick view on the S&P. As I mentioned yesterday in webinar, the bulls are pretty much in control here, and there was no breakdown. There was no technical momentum fading action of any sort that was concerning, despite the weakness that we saw yesterday. And today, right away, we are bouncing back a little bit. We are up 0.6%. So this is the same technical picture that was yesterday, or it was day before yesterday. For this to negate to a potential negative tone, we need to see a clear breakdown through 3130. And so until we lose 3130, this is still firmly in uptrend, the S&P overall technical picture, that is. So keep that very simple, and that's all you need to know. Now, let's move on to a couple of our favorite stocks, as I mentioned in Telegram last night as well. We're going to have another really strong day in Virgin Galactic, SPCE. SPCE is guided higher another 10% in pre-market. After closing at 2107, it's going to open at 2314. So that's another 10% move in pre-market. More importantly, keep in mind that now we have a fresh new catalyst in play, which is on July 28th. So that's 11 days from now, and there's a good chance that the stock will continue to run into that particular catalyst when the company will showcase the designs and the technology around the changes that they have made and what's coming in order in terms of product rollout. So I think it's going to be significant because it still remains a development phase company. So all those tidbits on the product side is going to be seen rather as bullish. So I expect this momentum to continue strongly, another 10% move to the upside. Similarly, in DraftKings is also pushing higher this morning once again, now nearing $38 per share. So this too is going to open up another 5%, 6% to the upside. And Spotify is also remains an absolute leader. Now, with all of this said, I have one stock I want to quickly discuss, ROKU. If ROKU gaps down materially, which I suspect it won't, it's probably going to have slight pressure in pre-market based on sympathy move with the Netflix earnings that came out last night. ROKU is a buy on weakness this morning if it gaps down. So I would expect ROKU to make a red to green reversal sometime today. As I expect the buyers will step in, taking advantage of the weakness after Netflix reported earnings last night, which is causing some sympathy moves over here. In pre-market or last night particularly, ROKU closed at 153 yesterday and was trading down as low as 148 in the overnight session. I'm already seeing this is slightly gaining grounds back, and now it's going to be around 152. So it's still going to open flat to slightly down, but I expect ROKU to make a red to green reversal. So if you're sharp, if you're fast, keep an eye on short-term call option activities. I think you're going to see some more buying in there. We saw some more buying in ROKU short-term weekly call options late yesterday as well. I think some people were trying to make a play ahead of Netflix earnings, but I expect them to come back again. And this is a tight bull flag consolidation through which it could break out and make a run towards $160 and plus, which is going to open the door for stock up to $170 per share. So keep an eye on ROKU for any kind of relative strength. Two things I will say real quick. ROKU still has some time, a couple more weeks before it will report earnings, but I've already discussed the channel checks on this one. I'll just add some more thoughts to this. The intra-quarter, for the second quarter that is, the intra-quarter data point showed that according to IAB's COVID-19 advertisers survey, on June 16, IAB published results from its third buy-side survey that found majority, or 59% of advertisers, are expected to increase their OTT ad spend in the second half of 2020 on a year-over-year basis. OTT spend, ad spend per the same report is expected to be up 26% year over year in the second half of 2020. And for full year 2020, ad spend is expected to be up 46% year over year for agencies and 32% year over year for brands. And this survey result seems reasonably positive for Roku, implying that the company should be able to generate substantial year-over-year ad revenue growth in the year 2020, particularly in the second half of 2020. And if you put this picture together of the survey results from IAB, basically it would suggest that the street estimate for the fiscal year 2020 are seem to be rather on the conservative side, even though they have gradually started to move higher, but they seem to be rather on conservative side. Secondly, uh, Peloton bike is sold out across nationwide. In fact, I'm trying to get one now. I don't know if I mentioned this before or not, but I was just talking to my wife. So we want to get a Peloton bike for ourselves as well. But we went to place an order just 2 nights ago. Turns out you cannot get one. The earliest delivery that is available is the third week of August. So there's a long wait on it, and that continues to be stretched out quite a bit. I bring this up because there is a content collaboration now between Roku and Peloton. As you know, last week, Roku announced the availability of its Peloton app and YouTube channel called Co-Chameleon on its platform starting from July 1st and May 19, respectively. These are positive for the user engagement for Roku, and also Roku new ad platform called One View that was launched on May 5th, and it was just made available in time for this year's upfront, also a positive. So when you put the whole picture together, the number of active accounts are growing up sharply, 36% year over year. The April saw a huge jump. For May, we saw similar kind of a strong guidance that came out, or channel checks that came out. The ARPU, the average revenue per user, is going up sharply. It's going to be up about 28% year over year when the company reports earnings. Similarly, the number of hours streamed according to channel checks, those are going to be up 46% year over year. And then you've got all these product enhancements taking place and collaborations taking place, such as with Peloton. Put the whole picture together, this is very positive for Roku. So if there's weakness in this stock, I expect the stock to make a run and go back up. That's it from me. Chronicle.
Morning, Fahad. A couple things this morning. First off, this is a very speculative value setup, but Gildan, symbol GIL, did catch an upgrade to outperform this morning from National Bank. They had channel checks which showed wholesale distributors have started to restock inventory following a period of destocking, and I think it's a promising sign of recovering demand. If you're not
Chronicle, sorry, which stock was that again? Sorry, so I have
Gildan, GIL.
GIL. Okay, Gildan. I was
Uh,
confused between this one and Gilead. Okay, got it.
If you're not familiar, Gildan is a fashion basics supplier that supplies low-cost cotton shirts to clothing retail companies and large stores like Walmart and Target. So category-wise, not exactly expensive consumer discretionary. The company does have good cost control, and unlike competitor Hanes brands, they have a well thought out supply chain. So a bit speculative near-term long idea, considering the company did have a bit of a demand problem even before the pandemic, which was the cause of the crash in the stock starting late last year. Second thing, just a high-level view of what I'm noticing from a lot of the earnings reports so far when I'm working on first read. What I'm finding is there's sort of a mean reversion taking place where the companies with the lowest expectations are reporting not so great numbers, yet their stocks are popping or just not going down as much. While on the other hand, growth companies with highest expectations going into earnings are either getting punished right after they report, or their stocks just aren't going up a lot, even if they're reporting blowout numbers. Not to say they're not dip buying opportunities, but I think this kind of ties into the growth to value theme we've been talking about. And I think this is shaping up to be one of those earnings seasons where growth companies report blowout Q2 numbers and the stock could still see pressure anyway. And I think part of that is because of forward rate of change, because chances are the growth from here is going to look a bit more logarithmic rather for the back half of the year rather than exponential. For example, if we think about all the new customers or subscribers that these stay-at-home companies already added in Q2, because of the pandemic, it's not like we can add them again. So the sequential comparisons are much harder. And I think we have to be a lot more careful with these names going into earnings. Similarly, it's not going to be easy to short bad companies, because what I'm noticing this past week is they are reporting bad numbers and the stocks are still getting bid. Like some are getting faded after the pop, but while others have actually continued going higher. So putting this together, from what I'm seeing so far on first read, this is shaping up to be one of those earnings seasons where large cap growth is not going to get any slack, while the smaller cap and mid cap value names, they're getting bid up even if they report terrible numbers and guidance. So just high level thoughts on the sort of playbook the market seems to be taking right now with earnings.
Regarding that, we saw that similar kind of price action in Carnival recently as well, where on bad numbers, the stock popped 16% in a single session, and then very next day it faded, pretty much gave up all of those gains. Um, you saw some of that similar kind of price action in airlines as well. Look, it's still too early to make assumptions about what the general theme or price reactions in this Q2 earnings season is going to be. But early indications are clearly that, to your point that you were making in an internal chat last night as well, where there's a lot of people that are making linear assumptions about growth from Q2 to Q3, and they're finding that a lot of these high growth name stocks, particularly in software that have run up so much, and they're going to grow at the same rate at Q3 as Q2, and that's where they're finding disappointing price action. So there's a reason to take profits once those earnings comes out. But on the other hand, the value names are just so beaten up where the consensus are in the gutter, where that no matter what they report, they seems to find a little bit of a pop on bad numbers. So at least that's how you're reading it. That's how I'm seeing it too. But this is so early in the earnings season. Let's see if this actually can continue for a while. Good stuff. Jay.
Morning, everyone. So today I want to talk about Monster Beverage, MNST. Last week there was a brief note from Stifel, some positive channel checks. According to their IRI scanner data, they noted that sales of Monster Green, which is the company's largest SKU, accounting for 29% of sales in the scanner data, was up 4.1% in the most recent 2-week period, and this was also the 10th consecutive week of growth. Furthermore, the total portfolio, excluding rain, also grew in that period, and that was up 6.4%. So positive channel checks there. Also, on July 5th, Sunday, July 5th, Stifel was out with a note which we shared in Telegram about the company possibly entering the seltzer category. This morning, B of A is out with a similar note, and let me just quickly share this little chart with you. They note that Monster, if they did enter the category, this would be 100% incremental to their sales. At just 3% market share, they believe, B of A believes Monster could add 100 million to 120 million in 2021 sales, which would be around 200 basis points of additional growth on top of their current estimates. And as you can see right now, the category is dominated by White Claw, which is owned by Mark Anthony Brands, and then Truly, which is owned by Boston Beer. And then the second part of the seltzer category would be the distribution. Right now, Monster is distributed through the Coca-Cola bottler network. B of A believes Monster, if they did enter the category, could partner with someone like Anheuser-Busch, who had previously distributed Monster beverages up until 2015. And the trade contacts that B of A is referencing says that Anheuser-Busch would welcome Monster Beverage back because of their recent handoff of Bang Energy to Pepsi.
Very interesting stuff. It's a question how much can they actually take the market share from White Claw and Truly? Because Sam, which owns the which owns Truly brand, has been on an absolute tear, right? I mean, these guys have done so well. Excuse me. These guys have done so well with Truly brand. It has energized their top line growth rate materially with a market share, according to this graph, of in low 20s percentage. So if Budweiser being its having its massive distribution network and Monster Beverage having its well recognized name in the energy drink market and it's sold through every convenience store, if they partner together, according to what BAML is saying, and if this happens, I could expect, they could take 10, 15, 20% of the total collective market share away from White Claw and Truly combined, depending on the product too, depending on the taste, depending on consumer appeal, and many other factors. But if that kind of market share, 10 to 15% move away from those two brands and to Monster, then if 20% share for Truly can cause Sam to act the way it has, I wonder how much positive that really could be for for Monster Beverage. I mean, could this head towards $100 per share, right?
Mhm.
I mean, something like that to consider. Plus, Coca-Cola is also behind this with its distribution network, so that's another major positive. That could be a huge development from a consumer standpoint. And a huge development from the product standpoint and reinvention and the growth rates and all the other metrics that will send all the analysts back to drawing board to
Mhm.
figure out how much growth they need to forecast. Very interesting stuff. And chart looks fantastic, by the way,
Yep.
for a technical breakout. So
Mhm.
I may jump into this one because this technical picture looks absolutely fantastic. Great. Avo?
All right, sticking with the housing theme. Yesterday, this is a stock that we've covered before, and we haven't covered it in a while, but I believe it was Jay had made it one of his picks back in 2017. Floor & Decor, FND, is the ticker.
Yeah.
Yesterday there was a trader who rolled out 2,600, it might have been more, but let's say 2,600 August 65 into September 67.5 calls. So that's a pretty sizable bullish trade.
So this would amount to about almost $1 million now position in the September 67.5 with the stock is 60.
Yeah, that sounds about right. The company reports at the end of the month on July 30th. Some positive notes, well, aside from the housing that we've seen, and also some construction data or permit data that came out today, which is pretty decent in light of what we're going through. So recently, Wedbush rates their target to $65 on an outperform rating, but mainly says that the independent flooring retailers checks indicate that the sales momentum has persisted into June. So this is pretty good. And there was another note here by Guggenheim, I believe it was. Yeah, makes a interesting note that
Do you
Floor &
have
Decor could.
any? Yeah, let me just, the most important thing about FND, just keep in mind that I believe their stores were considered essential during the shutdown phase. And I think that so they were possibly remained open. So be mindful on the same store sales growth side um, when it comes to doing the channel checks for the second quarter ahead of earnings report, because I don't think this company has significant online presence. So whatever the traffic that drove, it actually came through brick and mortar, and those were considered essential. So those would be the most important points to review going into the earnings report, not the online presence. But as far as the housing demand is concerned and the overall trends, those have generally been very, very positive for the entire industry. In fact, just this morning, we saw another housing data came out showing a 17% growth in the new housing demand, which was slightly below the consensus view of 18%, but generally positive for the entire housing sector. So something to keep in mind. Any
And
last
on
thoughts to add into
housing,
this?
yeah, on housing, I would add that just yesterday, news came out that the U.S. fixed rate mortgage dropped to another record low of 2.98. So from 3.03 down to below 3% now.
Yeah, very, very positive tailwinds. As long as the combination of multiple things, the combination of falling interest rates, um, tight inventory levels in the suburbs, and overall, even if slower, but overall improving trends in the labor market conditions, because you don't want the unemployment rate to be ticking higher again. You want unemployment rate to be actually improving, which improves the demand overall for the household formation. If those three mechanisms continue to remain in place, then it's going to continue to be very strong tailwind for all of these housing names. But specifically to FND, Avo, I think what might be worth before the next earnings comes out, if you can find specific channel checks related to the same store sales growth expectations for the second quarter, and that will give us a color whether whether it's worth taking a position ahead of earnings or taking a pass. Otherwise,
Yeah,
I do like.
the
Go ahead.
checks were for the industry in general, not
Yeah.
not for the company itself. But there's one point that Guggenheim makes is that this is a different report, is that independent stores which are not doing well, as well as big chains, if closures increase, there's an incremental market share gain that could be had by Floor & Decor. Unfortunate for the small companies that operate independently, but you know, it is the nature of the beast at this time. And another stock I can throw in there is Beacon Roofing, which technically sets up pretty nicely, I think. I haven't seen any options activity in there. BECN.
EECN or BECN, Beacon Roofing. Nice chart. Yeah.
That's it for
Yeah.
me.
Yep, good stuff. This is a nice chart too. So this is emerging from the base with the MACD and RSI bull crosses. We'll keep an eye on this one as well. There's a lot of housing names that have started to emerge. So I'm sure there's some really good plays that could be had in the entire group. That's it from us. Thank you very much, and we will see you in the chat room shortly.